Okay, welcome everybody to Tesla Today. We have Alexandra Mertz with us. We're going to be talking about Tesla and the global crisis that seems to be happening. How does Tesla fare? How do they position themselves? Is this an opportunity for Tesla to actually succeed? And see what's happening. But yeah, it's been quite a crazy weekend and continues to get crazier. Are you thinking, Alexandra, that this is going to calm down? Did the Fed do a good job here? But now we're hearing about Credit Suisse. We'll talk about that globally. What's
Yeah.
your
I mean, what's always the case is what evaporates in the United States makes waves somewhere else, right? So we have obviously a situation that has been quite particular in the United States because it concerned banks that were in a very specific niche, tech and all the coins, but the fact that the Fed had to step in, had to find a solution, I think actually a very good solution, brings with it that suddenly everywhere else people look at the books. I was talking over the weekend about SoftBank. I really want us all to keep an eye on them because they are in the same sector, they're over leveraged, and this can go very badly for SoftBank. So that would cover Asia. And in Europe, obviously, they woke up. I was actually watching the last 2 nights, some French and some German TV, because they're starting to get worried. So what happened is, I mean, the weakest child in class was always Credit Suisse. Credit Suisse has been for years, you know, the stepchild of the family, where everybody looked at how bad those financial results were. And now they suddenly understood what happened with SVB here, meaning that there is a part of the bank assets, the T-bonds and mortgage-backed securities they held, that were not marked to market, but they were just in there at their original buying price, and then just linear going to 100 if ever they were held to maturity. But the moment that people pull back their money, they have to be liquidated, and then there is this gap between the not done valuation and the real market price, and that's where the whole problem stems from. So they realized that Credit Suisse has the same problem. German banks have the same problem. French banks have the same problem. So that's what happened the last 24 hours. Credit Suisse now has the spotlight on them. They tried to get one of their big shareholders, which is Saudi Arabia, the kingdom, to one of those funds to put additional money in it. I mean, it rings lucid, doesn't it? But there we go. And so they said no, which is a good warning to everybody out there, including Lucid. The Saudis are not gonna pump money into industries anymore where they see a systemic risk. And I do believe Credit Suisse is going to be the first one. So this morning, Credit Suisse turned to the SNB, Swiss National Bank, which is the central bank of Switzerland, and let me not be mistaken, they will save Credit Suisse. They may merge them with other Swiss banks, or they may save them outright. There is no doubt about it. Switzerland cannot live with a bank failure. There's no way around it. I've witnessed other Swiss bank failures before, which always ended in mergers. So I'm not worried that Credit Suisse will go under. But look at the French banks, look at Deutsche Bank, look at Commerzbank. They suddenly have the same stress there. And it makes me wonder, you remember how for 10, 12 years now, they've told us that they have all this risk management in place and the central banks get all these weekly reportings on the bank and everything is wonderful. And nobody saw that. I mean, this is elementary. This is just absolutely crazy. So where does the basic problem come from? The basic problem comes from the fact that interest rates rose too quickly, right? I mean, the Fed was very late in getting into the game. And then once they were there, they were just as if it was a Tesla at the red light, right? Just going there all the way. And so much too much, much too quick. Mainly based, we talked about this morning in the space, on bad old data. I still can't believe that the major central bank of the world, which the Fed is, no doubt about it, is having so much lagging data and is looking at so much lagging data. That's been a problem forever. I mean, I don't know. I think there's 700 PhDs working for the Fed. My gosh, I just wish they're all on Twitter and we could all tell them what we think about it. It's crazy. So anyway, so this problem obviously went all the way through the world now. And I do believe there is only one way of calming this, which is no more interest rates and actually sooner or later easing, and a much more quantitative easing that they had ever expected. Now, the one thing I just want to hammer in, how in the world could Powell have been in front of the Congress last week on Tuesday and Wednesday, and his first sentence was the bank situation is perfect, we've got it under control. I mean, I just can't believe it. Where are we? Hello. So anyway, so what we got this morning as well, and I think we're going to talk about them, was PPI, which is Producer Price Index. And that was one very encouraging. I don't know whether you want to pull that up now, Herbert, because those numbers really help.
Before we get there, I just wanted to address a few things here. So first of all, Raymond, I always pull him up. I don't know why I'm doing it, Raymond.
Thank you, Raymond.
You said you
do it.
Alexandra, great. And then, Farzad, obviously just maybe a little cheeky. He's saying, are we going to be okay? Maybe not. And then somebody else here said, was this? Yeah, Swiss elite banking is history. And so I think just to kind of summarize a little bit here, right? But yeah, so you just said it, right? Credit Suisse is the weakest link of all the European banks, number one. But two, they have it's pretty influential in terms of just similar to SVP, and it's because the number two bank in Switzerland, they cannot let that go. It's very, very important. But the banks are all interconnected. So I don't think that, right, just like you were saying, that they're going to let Credit Suisse
They won't let. They will merge them. There are a couple of major Swiss banks, but Credit Suisse is actually very active. They have a very good trading room, or had a very good trading room in London. So this is not only Switzerland. They are active in other parts of Europe as well, and do a lot of lending and whatever. So again, this will be solved. Now it's in the hand. I mean, I can't believe they actually had to run to the Swiss National Bank and said, now help, right? I mean, obviously the first step for them was to go to the Saudis. Ask them for more money, capital rise.
That's where all the money is. That's where they keep their money.
It is.
Yeah.
Petrol, and so we are.
But the good news is, like you're saying, is that the PPI came in good. So there's pretty nice. So while it was the CPI yesterday, so it's looking like we're actually going to see rate easing. The PPI is a producer price index. It's actually a leading indicator, not the lagging, and it's basically showing us what the costs are for the manufacturers, their raw materials to produce it. And now we're seeing 4.6%, which is a lot lower than the estimate of 5.4%. So things are going down. And I think this is a nice chart to look, right?
Exactly. And let me just get back to that one. They also revised January down. So actually between January down correcting and the ones we had this morning, much lower than expected, they are more than 1% lower now what we expected. And exactly this graph shows it so much and so well. We don't have any more production price supply inflation issue. We just don't. We noticed it for a long time already in freight and in other things, but this is now clear that it's not that a consideration anymore. While at the same time, and that's why I said yesterday already, the bank issues, that's a language the Fed understands. I think they don't understand a lot of things, but when their friends at the bank suddenly have fire under them, that's where they understand they went too far. I started in banking in the 1990s, early 1990s, and the first international crisis I lived through, which brought with it a lot of deflation and also devaluation of European currency. So I was really impressed then. Was at the time when Orange County Bank was about in the same situation than SVB. So I think it was 1993. I always try to figure it out with my kids' birth dates, but I think it was 1993. So anyway, sort of the same situation. It started in Orange County. It then flew over to Europe. In Europe, the solution they had then, they don't have now anymore, was to have the local currencies devalue. Now what they do is obviously they're stuck in the euro currency. They cannot do that anymore. Switzerland can still do it, but I don't think Switzerland is going to give their currency for Credit Suisse. I still don't believe that. So anyway, that was the initial point in 1993 for a lot of rate cuts. And I think this is the point. In a couple of months, we'll come back and say, this was it. From there on, we're going to see the Fed pivot and go down.
I've been saying it yesterday, right? This weekend. I've been saying pivot. Yeah. But certainly a pause, right? That's what's going to happen. And I'm telling you, actually, I want to hear your opinion, but I've been saying that if there is a pivot, there's a pause or even a pivot, well, it's going to be a pause, okay? Maybe start reducing the rates. That's great news for Tesla, isn't it? I mean,
it is. And let me just quickly go there, because the bond market is actually telling the Fed since Monday morning, this is it, you're done. And today, again, there are 30 basis points drops in the 2 years. The 2 years was the one that really gave us pain, because that's also then straight away reflected in car loans and in consumer loans and whatever. So we're suddenly seeing this whole inverse curve that was too much inverse and was going towards a recession, flattening down. And I do firmly believe that for sure not hiking next week, for sure not. I think that's completely out. But that we will get a much more positive outlook now from the Fed, who will turn their language completely.
Okay. I should tell the audience, though, that you and I are pretty optimistic, and we've always been kind of optimistic, but Christian and Jeff is a little bit more, Jeff's more middle, but Christian's very negative. And so we got to balance out, like, if you're listening, we're kind of, we're both very optimistic about future outlooks. And so that's kind of the way I think we're set up. But just to wrap up this Credit Suisse, this is what happened this morning. So first, a leak came out, says Credit Suisse has appealed to the Swiss National Bank and FINMA because the Saudi bank refused or paused or said no, they're not going to keep funding them. And, it's not a joke. Credit Suisse is a globally systemically important bank. It's on the list of only 33 banks, and they are on it. So they're very important. Their stock plunged to an all-time low. And you can see this list here, almost 100% from all-time high.
Yeah.
The credit spread's blowing up. Saudi National Bank says they won't assist anymore. The bank is drowning fast. And then the markets are not pricing in.
This one is interesting. Yeah, this one is interesting, if you allow me, and probably lots of our listeners know this. This is the credit default swap price. I mean, you all know how I'm, fed up with the rating agencies and whatever. So one thing I'm always looking for, because the rating agencies are either so late or so manipulative or whatever, but so I don't want to take them into consideration. But the credit default swap prices is really important. So that is what any issuer can ask a bank to insure them against default. Meaning, if you want now to buy a bond from Credit Suisse, let's say a 5-year bond, and you want them to guarantee that this one is not going to default, you can pay $7.66% more, and then have an insurance. You really have to understand it like an insurance premium against default. And you see what obviously happened. We had that first spike a while ago when it was at 400 basis points, or 4%, and now this morning it was nearly close to 8%. So that is obviously bad news for Credit Suisse. I actually think it's like I've said earlier. I do believe they're going to be merged, they're going to be saved, but the market obviously is very, very worried.
Yeah. Well, this is I pulled this out from a nice article because I thought it summarized it nicely. Where this chief Europe economist said that Credit Suisse is not just a Swiss problem, but a global one. We increasingly are in it. We are in an interconnected world. And so whatever happens in the US will hit Europe and Asia, everywhere.
Yeah.
This is partly because Credit Suisse is so large, 574 billion, and it's twice as big as Silicon Valley Bank, partly because it's been long been seen as the weakest link among Europe's large banks. Somebody in the comments said they've been in trouble for 15 years.
Yeah. Yeah, they've always been the weakest risk takers. I remember when I was still in the market, if you needed a really strange swap or anything that was, nobody else wanted to touch, you would go to Credit Suisse. That was always the last address where you would go and get a price.
Okay.
And they always would give you a price.
I want to hear your opinion then on what does this mean for Tesla? We're seeing SVP,
I think actually
we're seeing global
in medium
banks.
term, yeah. I mean, first of all, let me answer a question that you threw out yesterday, and I don't think we got there. If I would be Elon, if I would be able to advise Elon, not that I know much, but if he wants to buy a bank, I would wait this out. I think this is going to last a little bit longer, and he can probably pick up something much cheaper in a couple of weeks than it is now. I just think this will vibrate for a while, and I wouldn't precipitate myself on the first one, except if it has very special features that you want to have. But if it's only about the bank license, if it's only that, I think you can probably catch up something much cheaper soon. Then what does it mean for Tesla in particular? I mean, we discussed yesterday, there may be a risk of suppliers not having, money lines that they need and whatever. At the moment in the United States and in China and in Europe, anybody that has money on bank accounts is safe. And with the example of SVBs, we now see that in the United States, it's even unlimited safe, right? So we don't have to worry about checking and bank and saving account being at risk. So I don't think the suppliers actually are today the weak point. I only see strength for Tesla. I do believe Tesla in the short, but for sure in the medium term, actually will gain from this. Those that currently need capital markets, those that currently need their banks, which are focused on other things, because obviously there is something else going on, they have an issue, right? If you know how much money Volkswagen owes and how much money they have to come up every month to pay their interest rates, those are all problems Tesla doesn't have. So I do believe Tesla is particularly well positioned to grow during this phase. First of all, by its own growth, by cost reduction and conquering new markets and new products and all that, but also because I do believe this is going to be a real stress situation for everybody else out there in the automotive sector. Everybody, the Europeans, the Chinese, and the Americans.
Yeah, no, I like that. And yeah, so did you comment yet on what you think is going to happen to Tesla stock if the banking crisis continues, if they resolve it, if the interest rates go back down?
In preparation of this today, I was looking at volume in Tesla, and it's going down a bit. I should have sent you the graph, but you remember we had in December and beginning of January about 200 million. It was crazy. And now we're down to 140. I think yesterday was 142. So I just do believe the interest on Tesla at the moment goes down just because people are focusing on other stuff. There at the moment, if you are an equity trader or an equity fund manager, you are looking at your bank stocks, you're looking at your insurance stocks, you're looking at maybe at automotive stocks that have financing arms, because that could be another one that's exploding sooner or later. So this is a situation today where a lot of bubbles can pop. Tesla doesn't have a bubble, but GM has a bubble because of their automotive financing sector and obviously of the lack of an attractive product line today. Same is for Ford. So this could be also the moment where the auto financing bubble finally bursts, because that one is ripe to a burst. So all these things are much more in the center of attention of people, and nobody concentrates at the moment on the Tesla stock. Tesla stock, as we said yesterday, I still maintain that needs some nice, good news, tangible news that these people understand. I mean, us Tesla people, we heard it at Investor Day, but most people didn't understand it at Investor Day. So it now just has to become, a Cybertruck day. It has to be good results in Q1 or maybe in Q2, but the stock will recover. I'm absolutely sure about it. I mean, I told you yesterday, I still think today the stock is worth 300, and I mean, it is where it is because that's the market. That's the difference between value and price.
Yeah, and you've been on record with this show and others that you suggest that Tesla should get into financing. But luckily, they're not.
Yes.
And so the other OEMs will suffer currently, but maybe they can use this opportunity to finally get into it, right?
Exactly. I think the problem with the other ones is that if you're a GM, you have financed cars a year ago, 2 years ago. Remember how crazy prices were, and people financed at those prices, remember? And GM financed them at those prices. Now the leases come to an end, the financing come to an end, or people can't pay. So now GM has to take back those cars, right? They have to repossess them. Now, how much are they worth now? So on one side, they lost an enormous part of their value. The car lost an enormous, and on the other side, GM has an issue for months and months where they can't recuperate the money from the person that was supposed to pay them the debt. So that's the bubble. Tesla doesn't have those problems. First of all, Tesla can summon back and find a car within a half a second, right? They know all the time where the car is. So if somebody doesn't pay and gets repossessed, the easiest job that Tesla has. The second is that entering the market now, you don't have all this backlog. You didn't do it at those crazy prices. You do it at today's competitive price. So I still think they should do that. I don't see a big risk for them. But I mean, I don't think it's a priority today.
No. And then we just heard this morning, was a car dealership guy said that 1 in 10 of used cars that are in loan are in default already.
Sure,
so
this is crazy.
People are
and
now
at what price
losing
will they get them
ability.
back? Yeah.
And
for the lender, it's a catastrophe. They sold the car 60,000 and financed it 60,000 2 years ago. When they get it back, if it's still worth 30, and there's going to be a huge gap for companies that have too high a credit rating, this is all going to explode at the same time. For them, it's coming at the same time. It's going to be really dirty.
Right.
I predict that that's much worse than the bank scandal we have now. Maybe it comes at the same time. Maybe it's still a couple of months to go. But that one is going to be a really bad bubble to explode. And Tesla won't be affected by it. I mean, it may be for a couple of days and week infected because the stock market is stupid and they do everything by sectors, right? Yeah. But Tesla itself, intrinsic value, is actually going to gain by it.
That's why I like talking to you, Alexandra. You're always very good about predicting what's going to happen in the future. You've done it a few times, and you're warning us. And so far, you've been correct. This is another one. I think you got your pulse. I mean, you were running a mutual fund, right? Weren't you running a institutional fund?
I was running
Europe
in the 90s. In the 90s, I was running the biggest European mutual funds. Yes, both of them, the two top ones. Loved it.
Okay, well, we're continuing to talk about Europe, so it's good that I have you on today.
Yeah.
Let's talk about what's happening in Germany. It says here that German auto manufacturers, despite declining unit sales in 2022, and we're talking about all cars, not just BEVs, they actually had a record profit in 2022. And so because of that, because of declining unit sales and record profit, their profit per vehicle went up, but still lags far behind Tesla. And then, of course, Alex, our good friend in Germany, he's saying, hey, if we only compare the BEV profits, then you'll really see how in trouble these guys are.
Yes, exactly.
And then this is a nice table that shows in euro,
going with it,
right? So this is the profits in euro per car, per vehicle, and Tesla is around 16,000 euros. And, these guys are 10,000 and 6,000 like that.
Yeah.
You know?
And he's very right. And he's very right in pointing out the 10,000 for Mercedes are all costs combined. If you would only have the Mercedes EVs, it'd be negative. Same for BMW. Same for Audi, same for Volkswagen. They admit it. They don't give you the numbers, but they are currently still saved by their ICE cars. Now, the one thing that really surprised me, I read a lot of press these last 2 days on Europe, just because it was steering up and I wanted to understand what's happening, is that in Europe, there are a couple of initiatives in Germany, in France, because the European Union has set this deadline. We talked about this a couple of weeks ago, Herbert, that in 2035, there are no more ICE cars to be produced. Yeah. And there are lots of initiatives to get rid of that rule. It is crazy. The Germans, the French, and the public opinion seems to be on their side. So there's still a lot of education that has to be done.
Sorry, there's a lot of protests against that because they believe that the automotive industry in Germany and Europe it's dying.
Exactly.
So they need to protect it.
Exactly. Yeah. There was a poll in the Figaro. The Figaro is the biggest French newspaper, and I mean the majority of people are against this rule. They want ICE cars longer than 2035. I can't believe it. I mean, this is absolutely crazy. So this is an educational thing, and I really hope Tesla is gonna become more educational about it, because it's not only about selling more Teslas, it's also just groundbreaking about all these the knowledge on EVs. People have the wrong image, and the enemies of Tesla are more virulent any day, just because they are now suffering. They understand their livelihood is on the line.
Their backs are against the wall. They're about to suffer, so they need to do. Exactly. They're going to do all the dirty tricks in the books. So this is good news for Tesla that we heard this was happening in Norway. So they just finally overtook the entire Volkswagen group in EV sales. So, what's surprising actually is that the brand loyalty is strong, and so Volkswagen Group, people still buy Volkswagen, like you're saying, but people are discovering, an upstart Tesla, right? New brand comes out. And then you can see the graph here. So the dark line is Tesla, and the light blue line is Volkswagen Group.
Yeah.
And finally, Tesla's just beat them.
Yeah, and I mean, I don't think I have to explain that, but obviously the first month of each quarter there are no deliveries because these cars come. I mean, Tesla doesn't produce in Norway, so they have to be shipped there. And then second month the ships arrive, and then third month most of the ships arrives, and that's why you have these steep increases in the last couple of weeks each quarter, and we'll see even more in the 2 weeks to go still in March. That's why it's not as linear.
So this is Norway. Are you pretty up to speed with what's happening in every single country? I mean, not
it's
every
actually
country,
difficult
but
in Europe
yep.
because you have 4 or 5
Yeah.
countries that do report daily, and so on those. I mean, the Model Y is just killing it everywhere, right? But I do believe we will see when we get the quarter Euro numbers, that those are quarterly, we will see that Tesla is by far number one again, and that's why I just want to let everybody know again. That's why there is so much FUD out there. So just don't believe everything that's happening. All these law cases getting thrown at Tesla at the moment. There's been in Germany, there's been a new one here in the United States. That's not just organically growing. There are people engaging other people, making sure they can make law cases against Tesla. This is a really dirty world now because the other guys are struggling and fighting for survival.
Mm-hmm. So do you believe that what happens in Europe is what's going to happen in the US? If you see what's happening in the countries like Norway and Finland, and that they're just EV sales is 70% at this point, new EV sales. I think in China it's at 50%, but the US is so lagging. But if we see what's happening there, it's good.
I'm counting a lot. I'm counting a lot on the Cybertruck. The US market is very different than the European one. European car market needs small, compact cars. They can live very well with a 3. They can, for them, a Model Y is a huge car, and it is a huge car. It's just whatever. But I do believe the Americans, they love their huge cars, like the really huge cars where you have a step to get into the car. I mean, when I saw that first time, I remember I was laughing my head off. How can you build a car where you need a step to get into it? But there you are. So they will love the Cybertruck, and the Cybertruck is gonna be the thing that will be making Tesla a more of a commoner's car, right? I mean, it's crazy because it's the most futuristic car, but it's going to be the one that will really bring the love to the car out in the Americans, I'm sure.
How well do you think BYD could fare in Europe? We just heard that a couple months ago that they're actually going to start leaving. They're in Europe already, right? They're in UK.
They're in Europe. They're in Europe, and they're in Germany too. In Germany too, they're priced about what would I say, about 10% lower than the Tesla models. They're crap. I mean, anybody I speak to has driven ever a BYD thinks it's just not comparable. But I mean, again, I'm happy for every EV on the street, right? I mean, especially in Europe where the adoption is higher, but it seems to now really get to a resistance level. So I'm happy there is something. I think actually in America, this is going to depend a lot. I said this before, on next year's election. I do believe importation of Chinese goods is going to be a major subject next year in the elections. And obviously we'll see what the Democrats and the Republicans have to propose on that. And car imports has always been a touchy subject. The Americans learned a lot when the Japanese cars invaded America and took over the market. And politicians are very sensitive to that. Every politician has, his state and so if BYD starts producing in the United States, that's probably another subject. But just importing cars, that's not going to be easy.
It's just that it's the hatred or the dislike for importing of Chinese cars to the US. Is that going to be more than the hatred for Tesla and not acknowledging that Tesla is an all-American car company?
That's funny.
But I just want to make the comment that, the brand loyalty that Europeans have, because they have very strong car companies that, came from Europe, Porsche and BMW and others, but they're dying. And then the same thing with the US, right? The brand loyalty for the US car manufacturers. And so then China's come out, they're being heavily subsidized. They came out with the EV, leapfrog the generation. But then how's the world going to kind of accept an electric vehicle from China? They're going to be great. I mean, currently today, they're not great, but they will catch up and they will be fantastic cars. No doubt about it.
There will be the new Japanese wave. There is the Chinese will be comparable to the old Japanese wave. There is no doubt about it. They can produce well. They're very good at copying what the Europeans and Americans like. They do a Mini Cooper. I mean, I know it's not a Mini anymore, but they do really cute cars now. And if they get to the level of sophistication that a Tesla has, they're going to be the biggest threat to Tesla there is. I don't think there will be a threat, but that's much more the competition than anything else at the moment. Anything.
Yeah, and I think Farzad was the one that said this. I've heard many people say it, but that Tesla could be the Apple iPhone and
Yeah.
BYD will be the Android
Yeah.
competitor. Is going to be
Much
two
lower
very
margin. Exactly. Much less margin, much more of a mass product, much less service in the car. But yeah, I think that's
But
how it's going to play out.
I've been saying this, but people don't like it when I say it. They don't think I'm right. But I saying that, okay, so Tesla is considered a premium brand. Okay, they're the top of the class. They have the highest technology. They're priced high. And people say, well, they should keep their price high because you're a premium brand. And I mean, what happens if Apple iPhone starts selling their product for $300, like the brand new ones, and they make all their money from the services, right? The monthly subscriptions. Does that then change the Apple view of what Apple is? It becomes a commodity versus, being seen as a must-have premium brand. I can see that, but I also think that Tesla's going to go this route because his ultimate goal is to sell this as many people as possible.
Yeah.
Not to necessarily get the highest
I
profit.
do believe the only luxury product that Tesla is going to have is going to be the Roadster. The high-end product are going to be the X and the S, but actually at a lower price than now. But what they're really concentrating on is cost reduction to be unbeatable in the mass market. And it's one thing, obviously, having a $300 iPhone, you may actually damage a little bit your brand. Having a $29,000 or $25,000 Tesla, you don't damage your brand. $25,000 is still a heck of a lot of money, especially if the product is then so much more compelling than anything else. You just wipe out the market. You sell anything that's coming out of the production line. And so I'm not worried about, downgrading the image of Tesla by a cheaper version. By far not.
Exactly. I'm just, they can create the cars for 50% the cost. That's just going to be scaring everybody because there's nobody can compete with it. But then they can make it up in margins all over the place, right? In the software.
And there will always be a luxury segment that's non-Tesla. You will have the electric Ferraris. You will end up with electric Lamborghinis. You will end up with the electric Mercedes that are better than what they currently have. There will be some exotic cars, but they're going to be just so much more expensive because they are like, they're looking at details like mahogany in the inside or whatever. And so their focus is different. There is a niche market for that, but that's not what Tesla is after.
Mm-hmm. What's this saying here?
What are you looking for?
Big news coming out of China, liking Tesla insurance and wearing away from BYD per Tesla daily. Weaning away from BYD.
But I did. Yeah, I've seen a little bit earlier that Farzad said the Swiss National Bank has now commented that they're providing liquidity, which is exactly what I thought.
Yep.
They're going to clean this up, probably merge with somebody else if they can't stand by themselves anymore, and then that's that. I'm not worried about Credit Suisse, but just be aware this is going to be a couple of weeks of coming out of the weak ones, cleaning them up. That happens at every end of a rate hike cycle. You can look it up. About every 20, 25 years, it happens again. So this is not something that should be worrying. It should actually encourage us to think, okay, good, we're seeing light at the end of the tunnel. This has to be cleaned up. Watch out for those other two bubbles. SoftBank, I really don't feel it. And the other one is the auto credit bubble. That one is going to be very, very painful.
Curious your answer to this question. We need to make Berkshire Hathaway start investing in Tesla. Whenever I brought that up, people just laugh at it saying, do you not know Berkshire Hathaway is a value investor? They would never do this. And yet, Tesla's a value company now.
Honestly, Elon told them, right? When the stock was around 120, Elon told them. Elon didn't tweet saying this should be the moment they came in.
I think it's going to happen.
Which is true, right? And they are not after buying it while it's not stable. As long as we have the current management in place, which I think is still for a while, this is going to still take a bit of time. I think it would do Tesla a lot of good having them because they're less of a sharky type big whale in there than the banks or than the ETFs. But I don't see it for the immediate future. I just don't. I think they still need time. They need reassurance. And this crisis, they're old enough to have seen more than me. So believe me, they want to get this bank crisis out of the way. They want to get this automobile crisis. Yeah, Dirk, I'm right.
Everybody says, Dirk says so. Everybody says it's not going to happen. Okay.
It will come late. Too late, but that's it.
Okay. Thank you so much, Alexandra. I really
Been a
love
pleasure.
you. You're so amazing. And I got this new outro, guys.
Thank
Take a
you.
look at it. Tell me if you like it. Where's my outro?
Let's do it.